My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate you, teach you, explain it all. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. That's it. Okay, I have had enough, right? I keep hearing that today's rally, Dow gaining 77 points, S&P rising 0.45%, NASDAQ advancing 0.7%, is somehow phony, that it's engineered by the Federal Reserve, which means everything will end in tears. Look, we definitely got a boost from the Fed, but the idea that this makes the whole move fake, it's ridiculous. On a day when the S&P briefly broke out above 3,000, hitting a new all-time high, I want to put all of this Fed-mandated bubble talk to bed. So yes, it's true that the averages were looking down before Jerome Powell, our competent Fed chief, gave some dovish testimony to Congress about how our economy is not in great shape. Powell admitted that business is slowing and the tariffs could slow it even more. He's right, although he probably should have mentioned that his December rate hike also played a role. Powell's speech and his answers to questions made it clear that the Fed will cut rates, perhaps even as soon as this month if the economy keeps deteriorating. And it sure sounds like he expected to continue to deteriorate. The prospect of a rate cut is what ignited the market, okay, today. But as soon as we got going, you heard the same story from so many commentators and money managers. They say it's all one big hot air balloon, practically a hydrogen-filled Zeppelin that's bound to crash somewhere in Lakehurst, New Jersey, just like its sister ship, the Hindenburg. I say the only things full of hot air are those gas bag talking heads. First of all, what the Fed giveth, the Fed can take away. We saw this in the fourth quarter when Powell created a bear market out of whole cloth by tightening too aggressively. He thought the economy was still accelerating. Really, it was already starting to slow down. Look at the charts. Powell almost single-handedly crashed the market because he made bad monetary policy. Now, at the time, I was screaming my darn head off, warning him to change course, but no one said, this is a bogus decline. It is caused by the Fed, so you can wait it out, and eventually everything will turn out okay. These commentators all act like all is well with the universe when the Fed's hawkish, and when the Fed's dovish, they pretend it's an anomaly, or worse. Like it's fine for Powell to kill the economy, but it's a problem for him to try to resurrect it. That seems nuts to me. Where is it written that it's wrong for the Federal Reserve to do things that help the economy and eventually help the stock market? Where? More importantly, let me say this. One of the few benefits of aging is wisdom. I've been investing since the S&P 500 was at 87, not 1987, but 87 the price. Remember today it's 3,000. I've seen this process play out where the stock market rallies and rate cuts the whole darn way. Is it really possible that for my whole career we've been in one gigantic bubble? Can we really say that it's all been engineered by the Fed and nothing else? Of course not. That's lunacy. So let me tell you why this rally is the real thing. And I've got 5 reasons. First and most obvious, there's an incredible thing about stocks. They may just, we're all going to die. They may just be pieces of paper, but you can sell them and take that money to the bank. And you know what? When you go to the bank to deposit your winnings from the big Fed-induced bubble, yeah, thank you. They don't ask you how you earn that money. Never once has anyone said, you know what? The teller window, I can't take that money. It doesn't count because you got it for an assist from Alan Greenspan. God, we got like thermonuclear. I'm not done. Or maybe you got it from Bernanke or Janet Yellen, yes! Or Jay Powell. A win is a win. It's not asterisk for heaven's sake. Second, it's true that our stock market is being inflated by money from overseas. Foreign investors are desperate to own dollar-denominated assets. Some of that's because the United States is in better shape than many other developed countries. Some of it's because central banks are all over the world aggressively debasing their currencies. So more and more money flows here. You know what my response is? My response is, who cares? We have a strong currency. The dollar's a magnet for money overseas. So what again? A win is a win. Hey, by the way, speaking of central banks, most central bankers would kill for the so-called bubble that Powell's given us, talking about uncertainty. People who make monetary policy want the economy to do well. It's not that complicated. Sometimes they need to tap on the brakes to stave off inflation. But they're not some kind of neutral referee, for heaven's sake. When business slows down, they're supposed to cut interest rates. That's what Powell says he'll do. He's not cheating. He's doing his darn job. Third, I've heard all day that the game is rigged for stocks to go higher. Oh, give me a break. The fact is that inflation's so low in this country and demand for money is deteriorating so fast that bonds just don't give you much of a return. That's how bond prices are determined. That means stocks, especially stocks with decent dividends, are the only game in town. Fourth, I know the situation is far from perfect. In a perfect world, I'd prefer for stocks to go higher because the economy's growing. What's wrong with stocks going up because the Fed is taking action to boost that economic growth? If you thought business was going to slow down and you were worried about the market, then after what Powell said today, you should be more willing to own and buy stocks because you're getting a jump on better times, and stocks anticipate better times. Fifth, and finally, I am so sick and tired of hearing that it's all about the Fed. Yeah, 2 for 1. Sure, the sector and the asset class matter. But if you invest in the best companies, you're going to make money over the long term, with or without the darn Fed. And if you invest in bad companies, just good companies with bad stocks like Levi's, even the Fed can't save you. Now, there's more to this game than interest rates. There's such a thing, say, as ingenuity, competitiveness, power of invention, technology. When you look at the top 10 stocks that led us from S&P 2000 to S&P 3000, they're all examples of sheer raw brain power and technology at work, right in front of you, almost like Edgar Allan Poe's purloined letter. But the bottom line, will you please save the darn bubbles for the bathtub, for heaven's sake? The dollars you can make in this market, well, let's just say those dollars, they're real, and they are spectacular. Mike in New Jersey. Mike!
Dr. Cramer, a big booyah to you.
Done your way. What's going on?
My call.
Okay.
Jim, I'm 75 years of age and retired for the last 15 years. I would like your opinion regarding the purchase of 10,000 shares of Starwood Properties, symbol STWD.
Okay, we have been behind Barry Sternlicht the whole way. We think that Barry does a great job. We pronounced the yield safe. We said the return is good. Still yields 8%. Stock's up very big for the year, but we are sticking with Sternlicht. I sanction the buy. James in Florida. James.
Booyah, Big Jim.
Excellent stuttering booyah. How can I help?
I did what you said. I read your books. All my boys watch your show. I took 10% off my 5 best stocks, and it's sitting in my bank now. I'm looking at Delta Airlines. What do you think?
Well,
Should I
like
throw
Delta.
that money back in the market?
Well, I like Delta. My favorite is United, Continental. But I'm not a big airline buyer here. Delta's, by the way, had a very good run. It's a very good company. Maybe on a pullback. But remember, the airlines, I don't like the airlines. If you really want to speculate on transports, go down and dirty. Go, believe it or not, with FedEx. Dylan in Florida. Dylan!
Hey, man. How you doing today?
Oh, real well. How about you, Dylan?
Good. I just wanted to see your insights on Nokia. I've been buying it. I just started in the market. Nokia is one of my first stocks I started buying. I haven't sold it. I'm about 10 cents under average cost. And given the news about 5G and the upcoming, do you think I should continue buying it?
Look, I'm going to be real honest with you. I think Nokia has second-rate. First of all, Nokia is a river in Finland. Completely apropos of nothing. But Nokia is a second-rate company, I'm sorry, with second-rate 5G technology. Second-rate, believe it or not, to Huawei, which makes better and cheaper technology, which is why this whole darn thing with China is such a problem. Stay away from Nokia. All right, I'm sorry to burst your bubble, but it isn't a bubble, for heaven's sake. This is real. The dollars you can make in this market are real. And yes, they are spectacular. Oh, man, Money tonight, I'm on a rampage, and you don't want to miss it. I'm giving you my take on the top 10 S&P winners. Then I'm taking a look back at the IPO class of 2019 to see which companies are worth considering. And it's a stock that's rallied more than 2,000% in the past 2 years, and you probably never heard of it. I'll reveal it when I turn in tonight's homework. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.